are we doing today? As promised in the daily financial news, I'm going to try to squeeze in this live stream to talk about an important topic where Fannie Mae has come in and disturbed the process, changed the game. I don't know if you've heard this. I heard this first about 3 or 4 days ago. Finally got access to the actual Fannie Mae letter, and it is going to be interesting. So if you haven't heard, or you don't understand what's going on, let me kind of explain it to you from my perspective. Fannie Mae issued a letter to their brokers, right? Fannie Mae, if you don't know, is essentially buying, they are the buyer of mortgage backed securities. So think about it. You're a lender, or you're a borrower, excuse me. You're going to a mortgage broker, maybe you're going to your bank, you're getting an investment loan, 20% down. You had a rate at 3%, 3.1, whatever it is. You signed the paperwork, you're good, you're happy, you have tenants. Your bank, in most cases, is going to package up that loan with 100 or 1,000 other, and then they are going to sell that to Fannie Mae. So in essence, you may think that your bank creates the rules. In most cases, not true. If your bank lends and then portfolios the loan or holds the paper, the loan, then yes, your bank makes the loans. But in today's highly leveraged environment, that is not the case in 98 or 99% of the occasions. Your loan will be packaged up with others and sold to Fannie Mae. I bring that up because Fannie Mae, as the buyer, makes the rules. They get to say, these are the things we buy and these are the things we don't. Again, the buyer has the power in today's mortgage market via mortgage-backed securities. So what did they do? How did they change the game? How are they punishing investors? Well, this is what they're doing, and then we have to ask why. So what are they doing? They have basically said to their brokers or their banks, we only want to buy portfolios where investment loans or second homes, yes, either one, make up a maximum of 7%. What does that mean? So, for example, if you are doing 100 loans and selling that to Fannie Mae, 93 of them need to be owner-occupant loans, and only 7 can be either a investment home, residential investment home, which again, just so we're clear, is a house through a fourplex, or a second home. That is very, very different. So what I've been doing the last couple of days, and I've been trying to figure out what is the average, because I'm like, I don't know. I mean, as far as I know, we only do 7% second homes in investment loans. So I can't validate this. I've seen this on another YouTube channel or two where they're proposing that before March, right, which is the month we're in, the average is right around 10%. So it's not as bad as I thought, right? That means 9 out of every 10 loans that's packaged up and sold 9 out of 10 is an owner occupant. But still, that's a 3% miss, right? 10% versus 7. But where the real problem lies, just like any competitive market, is 10% is the average. What does that really mean? Well, that means the lenders that give you and I the best rates, because we both know there are investors that are very investor friendly and they give the best rate, least fees, all of that. They probably have 14, 15, 18% average, right? They are geared towards investors. They're in trouble. They suddenly have to change their business model. And how are they going to do that? Well, they're going to raise rates because they can't sell 13 or 14 or 18% packaged loans to Fannie Mae. Fannie Mae won't buy them. Fannie Mae will buy a maximum of 7%. Now, this all starts April 1st. So, you can argue there's wiggle room for the next 2 weeks. But this is game changing. The banks, the brokers, all of that give the best rates to us, you can expect higher prices already, or if not, very, very soon. This also means there are some lenders that have been geared towards owner occupants, and maybe they're only doing 3 or 4% loans or investment loans. They, in theory, could come in behind and soak up some of the most qualified and riskless investors. This is going to disrupt the market. This is going to make us as investors recalculate our cash flow because mortgage rates will be higher. One mortgage broker I spoke with has already said his number one and number two warehousers of mortgage loans have raised prices 0.5%. And that is after the 0.25% because the 10-year treasury has went up. They're not surprised if investment loans will bottom out at 4%. That's very different, right? Many of us were seeing loans in the low threes. So again, what is going on? Rates are going to go up. You could also see LTV change because banks may still give great rates, but they're going to say, you know what? We won't do any loans unless you have 65% LTV. You know, maybe you and I were getting 75% LTV. One way they're going to lower the mortgages that they produce is just say, hey, you need 35% down instead of 25. So again, this is going to disrupt our market. If you are in contract or maybe not if you're in contract, but if you're doing your work, talk to your lenders. See what changed. Do yourself a favor and don't be surprised. If you had thought you were going to get a 3.5% mortgage, do yourself a favor and check because rates probably went up. Now for the big question of why. Why? And this is where you could be a conspiracy. I don't want to say conspiracy because that's kind of, I don't know. Yeah, whatever. You could think anything you want. I have not found any documentation why Fannie Mae changed. Don't know. So that leaves you and I to guess. First thing I thought about was, wow, Fannie Mae got crushed in 2008. They did. They were the buyers of the most toxic mortgages. They bought hand over fist. They were not good stewards of capital, and they got hit. So the first thing I thought was, are they seeing anything that rhymes with 2008? Right? Are they seeing a default picture that could worsen over time? And I really don't think so. The loan products that are being bought and sold, not anywhere close to what's going on. So I don't see it as a bad debt. Are there some landlords that will lose their properties because of eviction moratorium? Absolutely. Will it be higher than normal? Absolutely. But will it be anything like 2008? No freaking way. Not even close. No chance. I lived through that. It won't be that. It won't be that. So that's the first thing I thought was, are they seeing things like '08? And I just don't see it, at least not at that scale. It may be, if 2008 was the Andes, maybe it'll be the foothills this time. So again, a problem, but nothing I don't think they could handle. Then I go, well, what else is going on in the real estate market? You and I look every day, right? If you follow me, you do my course, you look every day. What have we been talking about for a year? Lack of inventory. Could Fannie Mae, as a quasi-government institution, simply say, you know what? Investors are crowding out owner occupants. I think they could. Now, do I think that's in the charter of Fannie Mae as a lender to focus or make it easier for owner occupants? I don't know. I don't think so. But I don't make the rules. It could be possible. That's one of the things that I think is going on is I think we have a new administration who is very quickly going to focus on owner occupants. And what we are seeing with the Fannie Mae change is the first step in encouraging home ownership. I think, again, if you're an investor, do your homework. Ask about rates. They're probably up. My hope is they're up 0.5 point or less, but they could be up 1 point. Just know, it just means you got to buy cheaper. We are going to probably find out over the next 6, 8, 10 weeks why Fannie Mae is doing this. I could not uncover anything. If you find an article on this, let me know. I'd love to read it. Again, it's not crazy, right? 10% of the loans today are investment or second homes, roughly. They only will buy 7%, but that 3% change and the fact that 10% is average means the the banks offering the best investment product, they're going to have to change the greatest because they're probably shipping off 14, 15, 18% of stuff to Fannie Mae, and now they can only ship off 7. That's going to be a drastic change. So that's what I got for you. If I come up with anything, I will let you know. If you find anything, send me a note, leave a comment. This is something that impacts all of us. I'm still buying product. I'm still trying to get loans. So let me know. Have a wonderful day. I'm going to go talk to Anna Kelly for our expert series. Bye.